Hey people, welcome back to the Bricks with Tips YouTube channel where we give you gems on property in the UK, buying property, selling property, renting property, no matter what it is. This is the place to get all of your gems. And if you want more of that, make sure you subscribe, you like, and all those things to get the YouTube channel going. Because this year, we're not playing around with consistency. Now today, I'm going to be talking about Nationwide's helping hand products where you can borrow 6 times your income. We're going to talk about the risks. We're going to talk about whether it's a good idea or not. And for me, this is an important video because I remember when I was looking to get my first mortgage, my main thing was I couldn't borrow enough. And I remember I used to go into the office when I used to work in banking, and there was even a friend that I had that she used to talk about a lender that would give 5.5 times your income, 6.5 times your income. There were these companies with like a one-page website. I couldn't tell who was operating. You know what I'm saying? It wasn't official. Listen, Nationwide is an official lender. Nationwide is one of the biggest lenders in the UK, and this is given an indication of where things could be going. So straight off the bat, I want you guys to let me know what you think about borrowing or lenders lending 6 times your income in the comments below. And don't be scared to comment twice. Let me know what you think after I break it down in this video as well. So without further ado, let's get into the video. So let's start off with why 6 times. The reason Nationwide is probably choosing to borrow 6 or lend 6 times people's salaries is simply because affordability is in crisis mode in the UK. Wages aren't increasing quick enough. Simple as. And this problem extends to much further things than housing, but it does pose a problem in housing in particular, right? The amount, the rate at which houses are increasing compared to people's salaries is crazy. I'm going to put a graph I'm going to put a little chart on the screen right now, which compares what it used to be like. So salaries versus house prices before and how the gap has just widened and widened and widened. So I'll start off by saying I respect Nationwide for trying to address this issue and making home ownership still be a possibility for some people across the UK. So next, let's understand the product and talk about the eligibility. So to give it some context, right, most lenders will give you 4.5 times your income. So if you earned £60,000, a lender will give you £270,000. But if you're closer to the national average, around £30,000, then a lender will give you £135,000. And for most people across the UK, bar some areas, £130,000, it might not even get the engine running on buying a property. So let's talk about Nationwide's products. Who's it for? You need to be a first-time buyer. For first-time buyers only. And I love that. The maximum loan-to-income ratio is 6 times the salary on the application, which I'll get into in a sec. There is a minimum household income. So household income includes everyone on the application. The minimum household income is £37,000. So that means that even people that are earning, one person's earning £20,000 and one person is earning £17,000, if they come together, they can be eligible. And in that scenario, if they came together using the Nationwide Helping Hand mortgage, they'd be able to borrow £222,000 rather than the £166,500 that they would be able to do normally with lenders that are offering 4.5 times your income. Breathe. The minimum household income in London is £55,000 though. So if you're buying in London, the minimum household income is £55,000. Now this may seem unfair to some people, but wages do differ drastically in London compared to other parts of the UK as well. So in London, you'll find that the average salary is much higher than the rest of the UK. But once again, we have an opportunity where someone earning £30,000 and another person earning £25,000 can come together, £55,000 household income. And in that scenario, rather than the £247,500 they'd get from another lender, giving them 4.5 times their income, Nationwide would give them 6 times their income and they would get £330,000, which is really good because the national average house price is currently roughly around £300,000. Now that isn't the London average house price, but to be competing with the national one is still good. And then guys, on top of all of that, they will allow you to put down a 5% deposit. I mean, that is crazy. Now, before I move on, and we're still on eligibility, You guys might be wondering why I keep on mentioning people buying together. This isn't what this video is about, but quick tip, that's where the trend is going. For 2 years in a row, it's probably going to be your third year as well. Halifax has mentioned that 6 out of 10 first-time buyers are buying with someone. Guys, don't ignore that. And I know some of you might be watching this thinking, I don't have a boyfriend, I don't have a girlfriend, I don't have a love interest. Who am I going to buy with? Guys, people are buying with work colleagues. And I'm not saying that you should do that, but some of you are looking past considering a work colleague and you've got brothers and sisters within your household who you live with already, who you could buy with. Do not ignore that. 6 out of 10, over 50% of first-time buyers are buying with someone. If you want to be in this property game, just if you're a beginner and you want to be in this property game, I will tell you something. Do not ignore trends and do not ignore history. Anyways, we move on. Eligibility. The loan size has to be less than 1 million, which is kind of crazy to say. It means that they're willing to lend up to 1 million through this helping hand mortgage. Kind of amazing for some first-time buyers. And then finally, naturally, you've got to be able to pass the stress test, the affordability, and so on and so forth, basically. Quick note that isn't in there, typically when they do these products, they want you to have good credit as well. The application has to be quite tight. So let's go through the pros and cons of this. One pro is naturally, obviously, people are going to be able to access the ability to borrow more and get a better house, a closer house, a house with better amenities, more bedrooms. Remember, when you can buy for more, you get a lot of these other options. As I mentioned, dual income is going to be a big major with this one because they're considering household income. So people can come together, utilize this and buy. If you earn 30,000 in London and you can't access this, all of a sudden, if you combine with someone else, you can access this and you're gone through the roof. And then the final thing is that Nationwide is a reputable lender. It's not being offered by it's being offered by Nationwide, reputable lender. The cons of borrowing more, right? There are cons of borrowing more. You've got higher monthly payments, first of all, and this could put a strain on people if they don't closely assess their affordability now and today, now and tomorrow. I always mention to people, assess your affordability now and tomorrow. What does that mean? That doesn't necessarily mean tomorrow, but it does mean that what happens if your company reduces bonuses they normally give? What happens if you, God forbid, go redundant? What happens if this? What happens if that? What happens if this? Obviously, there is risk, but manage the risk. Make it so you're not going overboard and overstretching yourself. The other risk is there's a bigger loan. You're taking on more debt. More debt is something that you're going to have to manage and have good financial know-how of, good financial discipline around as well. Another con is limitation, right? Nationwide are the only ones offering this publicly, and this is what this video is about. And you're limited to their products, basically. And for those of you that don't know, you have to take a 5-year fixed rate product or a 10-year fixed rate product, which also limits flexibility as well. And finally, you're bound by their interest rates as well. So where you could be shopping around and getting better interest rates elsewhere, you could be bound by their interest rates if you are using their interest rates. Who is not included, right? You won't be eligible for the helping hand mortgage if you are self-employed. You also won't be eligible if you're using a home ownership scheme like shared ownership or right to buy. Put it this way, it's for very vanilla applications. So let's go for my conclusions, right? Who is this for? I think this is mainly for two people, right? People that are earning relatively high incomes and they live in expensive areas, city centres, Manchester city centre, London city centre and other major city centres where it could cost more to buy, and your income is linked to the fact that you're closer in the city and so on and so forth, basically. But on top of that, even more than those people, dual households, it can allow people earning a relatively normal salary to buy and borrow more. And when there are two people, risk is reduced, right? Because typically if you're buying by yourself, if something happens to your income, it's just your income that's being affected. All of the income of the household is being affected. Whereas if you're buying with someone, you split the risk effectively. I mean, the chances of somebody losing their job or being fired in the UK is probably relatively slim. The chances of two people being fired and losing their job is even slimmer. Who should be cautious? I think people with irregular income should be cautious. People in new industries should be cautious. because you don't want to borrow a lot and then your income disappears and then now you don't know what to do. So people with financial discipline, people that lack financial discipline as well, should try to be a bit more cautious. For me personally, I rate Nationwide for putting this in place because high loan to income ratios have existed before, but before they were reserved for doctors, reserved for architects, reserved for surgeons. This one's for the everyday guy. And Bricks with Tips is about the everyday guy. That's the team that we support. So I rate Nationwide for doing this. Now, guys, always remember that if you do want to know the 5 steps to buying your first home in 2025 and 2026, there is a link below to our free webinar where we will go through the 5 steps that we've taken people through, and they've gone from not knowing where they want to be when it comes to buying their first home, and we've seen them all the way through to completion. Yes, in our platform on the Home Buyers Club, we see people through to completion. Many testimonials of people getting their keys, which you'll see on the webinar. But most of all, most importantly to you, on the webinar, if anything, you will walk away with gems on how to buy your first property in the UK and a blueprint, a roadmap that will allow you to do so. So make sure you check that out. Link is in the description below. And then finally, guys, let me know what you think about this new product. Do you love it? Do you hate it? Do you think it's risky? Do you rate Nationwide? Do you think that they're causing a crash, panic? Let us know in the comments below. We'll see you on the next one. Make sure you like, share, subscribe, and all those good things. Peace.